Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, January 24th, 4:57 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, uptrend, cautious uptrend. Need to solidify this move above the 200-day moving average before we can throw caution to the wind and just call it a plain old uptrend. But things definitely improving in the market the last 3 days after a test of the bull's mettle last Wednesday and Thursday. You can see over here on the trend gauge leadership, our short-term 21-day exponential moving average and our medium-term 50-day moving average signals all on bullish slash uptrend. Long term, NASDAQ 100 still below the 200-day moving average, but making a push higher there and getting a boost from Microsoft after hours with their earnings report. But they haven't given guidance yet. Guidance comes up at 5:30 Eastern time when they do their earnings call, but they have given some insight into what possibly could be the next big thing, and that is their Azure cloud computing numbers. A big part of their business were very healthy. This also spiked up Amazon after hours, and their comments are that artificial intelligence applications are going to need a lot of cloud computing capabilities, and they are one of the big leaders in there. And that is the reason, as of now, for the optimism after hours, and their stock price closed at 242, trading at 252 as of 5 o'clock Eastern time. So we'll see what the conference call brings, and we'll see what tomorrow brings, as Microsoft has been lagging. But this move up to 252 just leaves it a few percent shy of its 200-day moving average. If these big NASDAQ 100 stocks can get above their 200 days, the combination of semiconductors leading and FANG stocks leading will propel this market higher. That's the thesis we're looking at right now. Of course, that needs to be confirmed by price action, as always. So what happened today? After two big up days, a healthy pullback, tight range, a little choppy in the morning, tried to break higher in the afternoon, pulled back, but all in all, a win for the bulls today after two big up days. Not they tried several times to sell it off, but when we get to the tail of the tape, I'll talk about a key level that I was interested in, and it held three times in the afternoon every time we tried to sell down to it. So again, more healthy signs for the bulls. G6 down 0.11%. That's not right. That was down 0.50%. S&P 500 down 0.07, NASDAQ 100 down 0.2, Dow positive. Dow got tired of me talking bad about it. So, but for a change today, the low beta stocks outperformed, or low volatility stocks outperformed high beta. They had been uh, high beta had been crushing low vol year to date so far, but a little bit of a reversion to the mean today on that. Mid caps down 0.36, Russell down 0.3, global diversified 60/40 stock and bond positive by 0.1 as bond prices higher, meaning yields coming down. In-house GROTECTION, we're down 0.10%. We'll get to the tail of the tape and our focus list. But first, let's get into what we do here at Revere: active management trend following. When the market is healthy and above the short-term green line, that's the 21-day moving average. The medium-term red line, that's the 50-day moving average. The long-term black line, the 200-day moving average. We are heavily committed to the market. The reason we are not currently, and haven't been for most of 2022, is because of this chart right here, the chart of the last 13 bear markets. This is when your capital can erode, and every one of these occurs below the 200-day moving average. So back last January, when we broke below the 200-day moving average for the first time, we really started getting very defensive, and we spent most of 2022 in a defensive posture. So we lost significantly less than the market. Now the 200-day moving average has moved from 4,500 all the way down to 4,000. We haven't made new highs anywhere near new highs or the highs that we even were back in April, but we're now above the 200-day moving average. And this is one of the benefits of getting out of the way when it rolls over and recognizing the risk in the market. And we've been getting back in uh, after we broke above this 3-week base here back at the end of December, and positive for the month of January so far. If you're interested in an active approach like this that protects the downside and participates in the upside, shoot me an email, don@revereasset.com, or my partner, Dan Stewart, Revere president and CFA, the king of all things financial. He'd be glad to talk to you about your situation and get the ball rolling. If you're interested in becoming a client, he can be reached at dan@revereasset.com, or you can call 855 Real Wealth. That's 855-732-5932. And if a big burly Texan with a deep voice answers that phone, you know you're talking to the one and only Danny Stewart. So here's the S&P 500, which for some reason hasn't updated today's candle. So we'll show it on the 60-minute chart, and you can see this is basically looking like a big cup and handle over the last 7 trading sessions. This was the tough breakdown or attempted breakdown last Wednesday, a little bit lower on Thursday, but we held that key 3870 area. We bounced strongly off of there the last 2 days, and then nice tight consolidation day today. Uh, Leaders, but you can't go straight up. You don't want to go straight up. That's the stretch of a rubber band. And when the rubber band stretches, it snaps back in the other direction. We don't want to see that. We want to see time for oversold conditions to relax, pull back, and give leaders that made a nice run a chance to take a breather. And that's what we saw today across the board in leading stocks and in the indexes. All in all, a good day. Let's go to the NASDAQ 100. NASDAQ 100 daily chart here, you can see a tight consolidation day near the highs of yesterday. Very nice action. The 200-day is pulling down. We're 1.7% away on the NASDAQ 100, but after hours, even higher, up about 0.7% between Microsoft and Amazon popping because of the cloud computing same business line that they're in, and that carrying over to the other big tech stocks. We're now less than 1% away from the 200-day moving average, and continuing to show relative strength over the last 2 weeks after just getting really hammered from a relative strength and a price perspective since the beginning of August of last year. So good stuff there. Let's go to the Dow Jones Industrial Average. It was positive today, but the candle's not showing either. Let's go to the 60-minute chart. You can see a little volatile in the morning and lagging in the morning, but made a nice comeback throughout the day to close near the top of yesterday's range. You can see a cup, but not making a higher high, and that's the relative weakness that we've been pointing out on the Dow lately. No big deal. It led during the pullback. It actually led during that most recent advance as money poured out of tech and into more defensive sectors, but tech retaking the lead. And you can see the relative weakness over the last 4 weeks on the Dow. Midcaps. Midcaps, there's a nice tight consolidation above the ADMA at the top of yesterday's range, very similar to small caps. Tight consolidation next to near the top of the range above the ADMA. So good stuff there. Let's go to some other indexes. Let's start with the US dollar first. Dollar started out, let's go to a 5-minute chart here. Dollar started out strong, and this corresponded to early weakness on the market, but then it turned, gave it up. And we're going to see this in gold, silver, and gold and silver charts too. Just the opposite of what the dollar did is what they did. And then you can see the consolidation that corresponded with the consolidation in the big averages during the day. Let's go to the VIX. VIX dropping more today. Still below the declining 21 and 50-day moving averages. And as long as we continue to trend lower there, Uh, that is a tailwind for the markets. Let's switch over to bonds now. Here's the broadest bond index, BND, up on the day. Prices up, that means yields down slightly, and that is what we saw. Here's corporate bonds, also higher on the day. Junk bonds, JNK, also higher on the day, just barely. TLT, the 30-year, up on the day, 1.4%. That was the biggest move higher. Price riding the 21-day higher price up. This means that the 30-year bond yield should be down, and it ran into the declining 50-day moving average today and rolled over. TNX, the same thing, down today, ran into the declining 21 and rolled over. And then finally, let's get to the gold and silver. They started out weak. Here's a 5-minute chart of GLD. You can see the move down early that corresponded to dollar weakness. Dollar started to sell off. Gold popped, consolidated with an upward bias the rest of the day. GLD making higher highs. GDX, good day too. Same thing. Started off weak, ended higher, riding the 8 EMA higher. We re-entered GDX today on the move off of the 8 EMA. And silver, which has been lagging gold, bounced yesterday off the 50-day moving average, reclaimed the 21-day today just barely into the declining 8 EMA. So we'll see if this can get its motor running again. And Bitcoin, BITO, let's go to a 60-minute chart here. Nice tight 2-day consolidation now in Bitcoin after a strong move up the prior week. So those are the major indexes. Averages. Let's get to the tail of the tape. Let's see here, the news. We'll go right to the news. The rest of this is pretty much similar to what we've seen the last couple of days. Still showing bull case with bear case capabilities in case we give up. Plus, we've got really big earnings this week and next week. By the end of next week, we should have a very clear picture of the reaction to earnings and how it's tying to the indexes. Not to mention next Wednesday, we've got the Fed and their interest rate decision. So that caution is going to stay intact there until we see the reaction to earnings and the Fed next week. So some news, the DOJ sued Google saying its AdBiz violates antitrust laws and they want them to spin it off. There was multiple lawsuits against Google's ad business pending. And then out of the gate today, a weird trading glitch hit more than 30 stocks at the open where the quotes didn't come through. There was no liquidity. And so the algos which have basically people that had buy stops at the top of a range and sell stops at the bottom of a range all got taken out. There was a bunch of stocks were looking like they were 8, 9, 10% up or down when they really weren't. They're supposedly giving credit for these trades. If you got taken out on the bottom on any stock today during this gap down, make sure that you get credit and get your stock back. Those were erroneous trades, and they are taking action to fix that. In the notes, the day count went from up 2 to up 2 with one consolidation day. This is our third day above the 8 and the 21-day exponential moving average. Quote of the day, I really enjoyed reading this pre-market. Innovation is the only alpha. And this is in line with what Microsoft is reporting today. This ChatGPT AI engine is getting a lot of publicity. Microsoft has invested a bunch of money into it, and the talk in the release of their conference call or in their earnings report notes was that this is the next big thing. It's arrived, and companies are going to need their Azure uh, cloud computing system storage capabilities to use that. So quote of the day, and this goes with William O'Neill's N in CanSlim, innovation is the only alpha. We agree with that 100% here at Revere. So coming into today, positive as long as we stayed above 4,007. This was the last of the two big fib levels that we got above in Monday's trade. But on the other hand, I was also neutral after being up 2 days as strong as we were, and that's what we got is really a consolidation. But the good stuff, let's go to the S&P 500 here in the 5-minute chart. once again, as you can see in the afternoon, every time we pulled back, we held that 4,007 level. So for now, that fib is in charge. And note we undercut it very briefly, but got back above it yesterday into the close. That's where we pulled back yesterday. So now beneath it early in the morning today, popped back above it, and then tested it 3 times. That 4,007 now becomes a pretty strong support level. I should say more a critical support level, and a good level for the bulls to compare against. We're only, 10 points above it, so we could very easily give it up. But I do think that it's good news that we tested that 3 times all afternoon trying to break it and couldn't break it. So that 4,007 level, another one to keep an eye on. And like I said, that's the check mark for positive, and we held that 4,007, undercut it, and reclaimed it. UNR, that's the equivalent of a failed breakdown, and that gives you a low to trade against. Like today's low, we undercut all the way down as far as we did at 39.90. So that becomes a support level also. There's the levels, as I said, closed yesterday at 40.20. 40.40 is the next resistance level. That's the previous high from Monday. That's what next level that the bulls want to get across this big fib level, 286.82. We've been talking about this for 6 months here. We tested it almost to the penny today and bounced off of it. Here's the intraday ranges and the action. Let's get to the sectors. Bond prices up, meaning bond yields down. Builders were up on DHI's earnings, XBI, biotech up. And then the leading sectors were industrials, staples, utilities, and real estate. So revenge of the defensive sectors today. As I said, gold, silver, and gold and silver stocks started off weak, but finished strong because of the reversal in the dollar. Banks, oils, healthcare, semiconductors, and software weak today. Really, these led recently, and they're just giving a little bit back. Here's our focus list. We bought GDX today. We'll take a look at that, and we added to our long position on small caps via TNA. So taking our exposure from 0.72 to 0.78, or 78% of the risk in the S&P 500. But the bottom line for today, tight, healthy digestion day after, excuse me, 2 strong up days. It's in yellow, but it might as well be in green this for the bulls, knowing that we can't go up every day. Markets can do one of 2 things. They can trend lower, they can trend higher, or they can consolidate, working off one of the recent trends or preparing for either a continuation of the trend or a reversal of the trend. And today we got one of those tight consolidation days, not even a percent wide on the range today. So it's actually good news. I have this up here. The S&P 500 ATR was over 2 during the most volatile times of the sell-off back in the summer, all the way down to 1.56 now, trickling down from it's been in the 1.6s over the last couple of weeks. Moving on now, let's get to the focus list. We'll start off with what we own in-house and the changes that we made. We'll start off with GDX. The buy today, I already showed it. Tight range here, pulled back to the ADMA. When we pulled back again and the dollar started coming off, that's when we decided to pull the trigger and buy GDX. We sold some profits in NUGT about 2 weeks ago, so reestablishing that position. Still have a 4% size in XBI, which had a nice day today. After a 3-day pullback, 4-day pullback, after breaking out above this 84, 85, 86 level, we're up to 89. 1 step up, 2 steps back, 2 more steps forward. That's how the market works. The key is, can you keep your position without getting stopped? Schlumberger, SLB. See, here's an example of this ridiculously wide candles. This didn't really trade that high today. It did undercut and reclaim the 21 though, so I'm hoping that the exchanges and the charting services can fix these candles. Otherwise, that's going to be a mess for a while. So there's SLB still holding on to that, looking to add to that after Halliburton reported today, sold off a little bit, but a little bit of strength came into it today. JP Morgan finally doing what we wanted it to do when we bought it in the first place. Still down slightly on this position, but it's been clearly acting better over the last 3 days. And then for solar, we've got a 4% size in this. Nice, gentle, lower volume pullback after two big up days on a bounce off of the 21. Good action here. We'll look to add to this if some strength comes through as money has been flowing back into the solars, namely Array, very volatile stock, but near its highs also from its recent base, and also SHLS has been acting very well up near this 30 area is acting as resistance there. So keeping an eye on the solars. Now AEHR, which we sold into extended strength yesterday, uh, nice tight range, not giving much back. I'd like the ADMA to catch up to it for a lower risk entry. Not sure if I'll get it, but closed right where we sold it yesterday at 34. The longer it consolidates, the more of this oversold energy it can work off and give us a lower risk entry point. ACLS, another recent leader. Good day today inside after a nice bounce off of the ADMA during the great pullback of last Wednesday and Thursday. Mobileye has earnings this week. It's continuing to be volatile, taking the breakout today before pulling back all the way to the ADMA. TMDX, another small leader, continues to trudge its way higher. Their product is kind of amazing. Uh, Tight to get in and out of the stock. It trades pretty thinly, but it is continuing to show relative strength. MedP, another medical research and equipment stock, tried to break out yesterday, pulled back a little bit today. Just needs a little bit more consolidation. PI and Pinge. Twice tried to break out and now pulling back to the pivot, so it's not quite ready yet either. One that did have a nice move today on earnings, PACCAR, PCAR, big volume move up 8.6%, busting out of its flat base. GE reported earnings today, and although they disappointed looking forward, the market reacted positively to it with a positive outside reversal. Uh, Looking good there. GE bounced off the ADMA during that reversal today. The GE Healthcare, which I've been talking about for a while, um, reports earnings next week. Let's see, and then a couple of lithium stocks with some alerts today. ALB looking pretty good here. Broke above its 21 a couple weeks ago, pulled back, now above the 50-day today. And then again, Microsoft after hours. Let's see if we can tell where it's trading. It's up 4.43% at 252.77. The 200-day moving average is at 255, so it wouldn't take much more to get back above there. Now, it was trading as high as 264-ish 5 weeks ago before it had some downgrades, namely in this area. And it announced some layoffs, but it went to 264 without reporting this earnings report. It can certainly get back to 264 if it's well received, and they provide decent guidance going forward. So the 200-day moving average and that 264 level are some key areas to keep an eye on. And then, as I mentioned, Amazon up also after hours. It's up 3.4%. Right below 100. Remember the strength and the volume that came in 2 weeks ago on Amazon? It's done a nice job of consolidating that for about a week and a half. Now trying to bust out of there. Still 9 days away from earnings, but their Amazon Web Services is in the same business as Microsoft's Azure, and if one's working, usually they're both working. If one's weak, the other one is weak. So that's why this is being bid up after hours on the Microsoft news. That's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. Remember, it's not how much you make in the markets, it's how much you can keep. And with that, we will wrap up Tuesday, January 24th. Don Vandenbord telling it like it is. Just the facts here at Revere, no opinions. We go by price and volume. We have a thesis and an expectation, but if price doesn't support it, we won't be holding on to that thesis, because a thesis that loses money is, you might as well call it a dream, or more likely a nightmare. Thanks for listening and have a great day.